So here we go.
All right, we're getting set up.
Okay, we have gallery view. Hi, Stephanie, Celeste,
There.
Anne
Anna
Marie,
Marie.
Julie. Hey.
And I think we're getting, some of the ladies are asking if we could help with putting it on gallery view.
Or do we have to, each of us do that from our own?
Yeah,
Do it from your own.
that as
Okay.
far as the directions for how to do that. We're not on gallery view either.
Nope, so let's get some directions on that.
Okay, so if you go up to view
I got
and then-
mine.
and select
Okay.
gallery view,
Let's see.
view in the upper right-hand corner.
Yay, we're all here.
So,
So we were having a lot of fun and we decided we're gonna wear our fun t-shirts. So this is very appropriate. Underestimate me. That'll be fun.
I also have a summer version and a
Yeah.
winter sweatshirt version.
Yeah, mine is run. I thought you said rum.
That's good.
Well, there's a lot of females here.
Oh, yes. I mean, you're headless right now.
Hey, Keith.
How are you?
Hi, Keith.
Look at all the women that I love
How are
and
you?
follow are all here in one shot. There's Anne Marie and Anka, who we know more personally, and of course Pat and Niki. And Stephanie, I know we've talked, but we've never actually spent time together.
Right.
I've seen, yeah. And Hema, yes, I've seen you too as well.
Do we have our beverages?
I'm cheating. It's water in a wine glass.
Yeah. Do we have
Are we having a toast?
Why
Oh.
not?
Showing you my drink. Hi, everyone.
Hey.
I think we're all here.
Is Anne
That's
Marie
it, we're
in?
gonna go.
Anne Marie was gonna try.
She's
Oh, there
right
she
there.
is. Okay, all
You
righty.
gotta see where everybody is.
Jody, you're still muted. And I just say we raise our glasses.
Okay.
All right. And a toast to some badass women. Any crap on the floor at home or in this room.
Cheers.
Yes,
Cheers.
Cheers.
Here. Thank you,
Thank you.
Pat and Nikki and Raleigh for
Cheers.
putting this all together too. It was really great.
Yes. Thank you, guys. It was awesome.
Wait a second. Here's the real badass.
That's Bella.
That's Bella.
I feel like already there's been
She's top trader.
there's been two
That's Bailey.
scavenger hunt ideas. Get your fun T-shirt and get your pet.
I
Like
can
it.
get my pet. Oh, you would love my pet. A chow.
I
Beautiful.
thought, wow. Oh, great dogs. I
Is
like
that right?
Yeah, gorgeous.
Pat, I can't see what
ready.
your t-shirt says. Nikki's is awesome and loud and clear.
I thought you said rum.
Nice.
We have a whole assortment because, of course, as you know, we don't wear street clothes during the day for the most part. So the first few events we were doing was pretty hysterical because it was literally business on the top. And then on the bottom, I've got my workout pants or
the slippers.
yeah, or my pajama bottoms. It
Right.
doesn't matter.
Oh, for sure.
I think everybody should show their bottoms. What are you guys wearing?
I was prepared for that. I was like, I'm
can't
gonna wear
do that.
real pants to make sure.
I think it's not wearing
They're too comfortable.
shoes.
I was doing research for one of my clients that does candlesticks. And so I was looking for, what was it? A fat bottom something candlestick. The images that I got instead. I'm like,
Oh no. Rounded bottom. I think that might be it. Rounded bottom.
That's good. Mhm.
That's a buy
That
signal
bottom
for sure.
Well, I know Alicia was sharing a rather colorful story about working with men in this industry
Years and years
years
ago.
and years ago. And Mish, I know you were in the same position, Stephanie. I mean, everybody's been
Mhm.
their stories to tell. I'm just so happy that we're finally in a day and age where that's no longer accepted. Doesn't mean it stopped, right?
Mhm.
But no longer accepted. And let's see, we've got a good group in here. So let's go to
Yeah,
some
I
of the
think we can
questions
get to
that
some
were
of the
posed.
questions.
Yeah.
So let's see, I've got them listed just kind of as they came in my inbox. So we've got Anne Marie. So I think, let's see, someone was asking during yours, talking about building confidence up as you learn and if trades go badly, and kind of how you approach that.
I think I lost a little bit of that. So let me do one thing and shut down some of the data I have in the background. And the question is, how do we keep confidence, or
build my confidence up as I learn, and if trades go badly, how do I keep that confidence?
okay, so I think people who live in the psychology space make a living helping with people through this day in and day out, because when we work in a competitive space, we're going to win and we're going to lose. And playing the game means that that's going to happen. And so the first thing is to socialize, and I mean from a gut perspective, realize that no matter how much you prepare, Tom Brady prepares and he's going to lose a game, right? And so we just have to realize that is truth. And so the way we keep confidence is by making our losses small. And so that's very hard if we think to ourselves, oh my gosh, what if I've put my stop? What if I don't leave my stop wide enough? Then I'll miss out on this trade, and then, blah, 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 blah. So it all winds through itself. The first thing is you've got to realize that you need to build a strategy that's consistent over time. Consistent over time means that over time you make more than you lose. And when you lose less than when you win. And so many of us are very eager to jump onto the field without taking the time to make sure our protection gear is on. And in this case, it's managing where that risk is. And so I would say, one, learn to look at a chart and go, okay, I see everybody buying here, and I might have missed that place where everybody's buying, but I know that that is the level. So if I can dig deep and pull down, and knowing the market will generally take me upward, that's where I might say, hey, listen, I'm going to wait for this pullback. If I lose, it's only going to be a little. The bottom line is you're going to be able to regain your confidence if you just fall off the bike with a few scrapes versus going careening off the side of a mountain and break both your legs. You're going to be in a space where you're like, I don't think I'm going to ride anymore. So it's really about the pain that you experience, and you have to learn to manage the minimizing of that pain so that the emotional damage is minor and you can get back up on the bike.
Absolutely.
And that's all about making the risk small.
To that end, I just want to add on, that's a lot of what my presentation was, which is the psychology of this. And Anne-Marie's absolutely correct that you have to have a plan and you have to stick to your plan, and it has to be a good strategy. But you also have to have this growth mindset, which I think as women, it tends to be easier for us to have this growth mindset of I don't understand something yet, but I can understand it. It is knowable, right? It is learnable. And yeah, I fell down, but you know what? I'm getting back up and I'm going to learn from this. So that's sort of the disappointment versus regret I was talking about, which nobody could hear because we had technical problems, but you will hear on the replay. But it's so important to have this idea that regret is this idea that I can learn from my whatever just happened to me, and disappointment is something that's a spiral down and you don't want to have it. But also to dovetail on what you said, is it's kind of experience on the job. And I'm famous for when we go out speaking, telling people you're going to lose money. You have to go into this knowing you will have losing trades.
Yes.
Oh, if I may jump on it. Well, first of all, yes, I mean, definitely you have to have a mindset going into the trade of how much you're willing to lose on any
Exactly.
given trade. But also, if we look at it from a mathematical perspective, you can have 10 trades and you can have 6 of them losing trades. So let's say you have 6 trades that lose $1, but your next 4 trades make $2. Now you're ahead by $2. And that's what you have to look at it. A lot of people ask me, what's your win-loss ratio? And that's why I'm holding this little piece of paper, because we actually went back a couple of months and looked at the win-loss ratio. And it's about 50-50, which is actually pretty good, because I just gave an example of 60-40. But here's really where you have to focus on, is the win rate was 10.4%, the loss was 3.6, which means even though it's a 50 win-loss ratio, I'm making 3 to 1 on the money.
Yeah.
And once you look at it in that mathematical way and you become dispassionate, and to jump on what you're saying, Julie, is also really lose the attachment to the outcome, then it really becomes a much easier game. And as women, we hate losing money, and that's okay, because we can actually know that if we have a strategy, a formula, whether it's any of the women's strategies and formulas that you heard during this incredible presentation, the point is that every single woman will have some kind of a risk management, because that's just who we are. We don't like to have a lot of risk.
We're better at managing usually than
exactly.
The
Women are better traders. They're better bankers. They're better at CEOs, because we have this innate protection sense of ourselves and all the people around us.
It's one thing I'd like to comment on that too, just to delve in on the women piece, is I think that we as women are also more comfortable sharing and teaching and helping other people. It's not a competition. There's enough room for all of us. And that's a really nice stance when you listen to women teach trading. It's a very different approach. And it was wonderful to be part of this great group today.
Yes. And I will say, I'm probably the oldest one of all of you.
I don't know.
I think so.
We'll have to take a poll.
So, but I'm saying, I started in 1979. I don't admit that often. And so I've been doing this for over 40 years. And there were no women in this business. So to see all of you, whether it's just one generation less or 10 years less, or 5 years less, or 2 generations younger, it's thrilling to me. So I love having all these women in the space.
Cheers to you. Good.
Cheers, that's
Thank
right.
you.
Yeah, I'm an old girl. Yeah.
Okay, Michelle, I don't know. I don't know. I sort of started when you did.
Well, you
also,
look perfect.
in a bank with all guys and all men, and and I had to navigate my way. But I didn't really see myself as being different. I just wasn't. I just did my job, and I wanted to succeed, and I did succeed, and it never crossed my mind that I was a woman that was not being compensated as much by the guys. But I later found out, because I never asked questions.
Yeah.
But then I did find out, and I did have a wonderful manager who really brought me up to the level where I should have been, but I just never questioned it. And so it's great to be here. I was just reflecting on my 35 plus years. Okay, you say 40. I don't want to go there yet. And it's really nice to see everybody on tonight, and to see that women have really, really come forward in this industry in a major, major way, and are, really have institutional trading mindsets, and are just great traders. And as I agree with you that women are just great mentors and great coaches. But again, I mean, I don't look at myself as a woman. When people say to me, "Well, gee, you're a woman. That's amazing." I just don't think of. I don't really think.
I'm
about
the same
that.
way, because I've always been in a male-dominated space. I was a mathematician, and I think a lot of us can probably say that exact same thing if we're sitting here. We just competed in a different space, and for me, it was always gender neutral, because I've always gravitated to things that were meritocracies in the first place. And so if you do the work, then in the end, you'll get to where you're going. Just do the work. Just put your head down. Don't think about anything else. Just do the work. And it's just, it sounds simplistic, but it really it really was the path to me that I took. I mean,
Well, throughout
really
history, when women are equal because of things like technology, it's a fairer place. So if you take pilots,
yes.
it doesn't matter if you're a pilot, if you're a man or a woman, because actually we were with my son, we were looking at this National Geographic thing, and Amazons were actually a people. And the women rode horses and shot arrows too, because you had the horse, right? So with technology, even in my article for this, I'm like, it's not really different. I'm not, you women who have done the industry thing, I swear to God, to this. But when you're home and you're on your computer, playing field's level. So let's do this.
Well, it's interesting because on the commodities exchange where I was for 13 years, I was like, there were 4 women traders. And so there was, in the beginning, yes, absolute overt sexism. I was told, why are you here? You should be home vacuuming. I was pulled up on charges for keeping charts in the ring as a way to try to keep me out. I actually won that battle. But on the other hand, exactly what you said, it was a completely even playing field because I was in the pit the same as all the other guys. So it means I had the same opportunity. The only difference really was the physicality, which now you don't have to think about anymore.
Right.
I was obviously not physically as big, strong. I couldn't scream as loud. And so it actually, I turned it into, the old lemon turned into lemonade. I started to become a chartist. And that's kind of what I was talking about in the beginning of my presentation. The mother of invention being necessity. I had to stand out when things got crazy. And I actually would pass my orders in occasionally. But again, equal playing field, except for the physical part, which none of us have to deal with anymore.
Right.
Yeah, for sure. I want to make sure we get to some of the questions that people posted earlier. And so, Ish, there was one for you. I can't see, so.
Let's see. Well, I think she talked about it a bit. What was it like to be one of the few women on the commodities floor in New York?
Fun. It was 1980s, by the way, sex, drugs, and rock and roll. It was incredible. I got to say that, the harder part of navigating was not the trading. It was the socialization part, because I didn't want to be the party girl. I wanted to be respected as a professional, but I didn't want to be the stick in the mud either. Oh my God, forget about her. She's a prude or whatever. So there was that constant, I wanted a party, but not too much. That was interesting. And let me tell you, in the 80s, it was a lot of fun.
So I wanted to just get everybody's feedback on something. I was doing a lot of research, for this event as far as women investors. And I came across a publication that was Institutional Investor. And they talked about, and bear with me because I'm going to read some stats here, but from January 2000 through May 2009, women who ran hedge funds delivered nearly double the investment performance of their male counterparts. And that's according to Chicago-based hedge fund research. And I found a lot of very similar information across a lot of different publications. And then I thought this was really interesting because Raleigh's talked a lot, and he was doing a lot of research on women. The theme we kept hearing is risk management and having a plan. And based on the data they collected, it said that it also appears that women are better in crisis. So in 2008, funds run by female managers were down just 9.6% compared to a 19% drop for the men.
Wow.
This is not just male bash. Obviously, men have strengths, women have strengths, but I just found it really interesting that those were the stats, and that's how they were analyzing the data. So I was just curious what your thoughts were on that. And
are we more disciplined? Are we willing to follow our own rules? What do you think makes us more consistently profitable? Sarah, you've been quiet, so what do you think?
I do believe that, just as Julie had mentioned, and Julie Dwack had written a lot about that in the Growth Mindset book, that absolutely piece that I think women are willing to take smart risks and willing to believe in themselves and the ability to follow through. And I do think that that's one of their key pieces for us in terms of our success in the market.
Right.
Yeah, I think too, going back to competition too, well, I can speak for myself anyway. I don't feel the competition with other people. I mean, I'll compete against myself. And so when I'm not concentrating, I'm not comparing myself to the S&P, I'm not comparing myself to any other manager, but exactly, what am I doing? Am I following my rules? Am I achieving the goals that I have for myself? And so that kind of process is what put me, just because of my method, into cash before COVID. So I had a nice little nest egg, saw the downturn, and then able to use that method to get back in and make those kinds of returns. And so that's how, being able to navigate, not having that competition is, and I'm like a lot of you said too. I mean, I never looked at myself as a woman in a man's industry. I mean, I'm just like, I'm just doing what I'm passionate about and loving it. And, has so many different advantages to being in this industry. Now I appreciate what you all said back in the 80s, because I was in the market in the 80s and accounting and in the markets, but and so much has changed. I mean, I my jean jacket has holes in it by choice, but back in the 80s, we always had to wear those, suits and those little ties. I mean, can anybody relate to that? But it's so different now because the game field is level, and I'm just in my office. I enjoy it, and I'm competing against myself.
Yeah. So Hema just stepped away, and I was going to ask her.
Well, I was.
She's probably shifting her shades.
So I was having my own Mike Pence with the bug on his head moment where I had my blinds painting stripes on my face.
I knew that's what you were doing.
Yeah. So I looked at the camera suddenly and I was like, that's a cool makeup look, but yeah, no. So I was going to say that I think going back to what you said about the stats for the women-run hedge funds, I think it's a general natural inclination we have to think several steps ahead, like not just the next step. And so even in my own life, like my husband is brilliant, awesome, great guy, very good in his career profession, and thinks a day out a lot of the times in terms of like, wait, what do I have to do tomorrow? What's due or whatever. I'm always a week out. Like I look at life a week at a time, and I feel like that allows me to be ready if something's going to pivot that I didn't see coming, because I know, well, when do I have time, to deal with it after that? And I think the same can go for your trading business. So being able to think a few steps ahead, I think women just have a natural ability to, like, we just do it more often than
multitaskers, right? We multitask just in it, like that's part of our evolutionary psychology is we multitask. So it makes
hunter-gatherer. It's all hunter-gatherer. Men that single focus out there to kill the woolly mammoth.
Right.
While we were out, taking care of the kids and gathering with each other, gathering our herbs and making the food and Yeah, right. So
I have a little bit of an alternate to the reason that the women aggregate into these spaces that are better than in a group. So here's the very interesting thing, and this is my assessment from looking at these spaces. If you look at that same data and you look at, okay, who had outsized returns and who blew up their accounts and had to go work at another hedge fund, which is what we know how the game works, right? So not anymore because they're trying to change compensation a bit, but you work at a fund and you're encouraged to take risks, and you take as many risks until things blow up. But the really big thing is, if you look at that same data, which would give us a little bit of a bell curve, we're going to see men on the very far side of that incredibly outsized returns, and we're going to maybe see a woman or two, but we're going to see fewer people out in those edges. And the strength of the male mindset is that testosterone event that says to him, no matter what, I'm going to push for the zenith. It's all or nothing. And I think as women, we're maybe more uncomfortable with that. So over time, we end up we keep ourselves in the safety boxes. Listen, there's nothing wrong with a safety box. But the same reason we sit in the safety box is the same reason we're not on the tails, right? And so we could say, hey, it's great I'm not on the zero side of the tail, but maybe there's more, and I know this is all estrogen. I don't want to be contrary. What I'm trying to say is, the element of that driving force that is masculine, that takes that outside risk, sends us into a space where we say, hey, listen, the majority of us, we're not going to get you in a heap of trouble, but there are a few of them out there that are going to take a lot of risk. And if you want to jump on that bandwagon and either sell pencils or live in a yacht on the French Riviera, here's your choices. And so all or none doesn't feel comfortable to us in general. And so will keep us.
That it was the women who were leading the hedge funds. It wasn't the men, right? Am I misunderstanding that?
No. We're talking about, she gave us a median. She said between 2000 and 2009, women outperformed, and between 2009 and the present, women outperformed. But I'm talking about the fat tails part, or the tails, where there are people ending up with nothing and there are people ending up with billions. And men are going to be on that stretched out side. I think it's the testosterone event that allows them to say, that's exactly right. Someone says, hey, women live to trade another day. When it's easier because we are the gatherers, because we are the comforters, because we are, hey, I got to figure out how I have to feed you tomorrow because you are mine and I have to take care of you, as opposed to, do you know what I'm saying? I think that gives us our plus, but we can also see why it is that we can look at this and go, hey, we're outperformers. Well, then why aren't our names on the tops of those lists that say richest, second richest, third richest, fourth richest, fifth richest? Do you know what I'm saying? So that was the only point I was trying to make.
Stephanie, were you gonna?
You look like you have lots of time.
I want to say something. So I've trained a lot of people, thousands of people, men and women. I've actually done gender trading challenges. So I'm pretty well aware of how the male brain versus the female brain works. And I'll tell you the secret to why women do better. We change our minds like that, right? And your husband will be like pissed at you, right? Because one day, like, I tell Matthew, right? I go, Matthew, I'm really in the mood for Mexican. You want Mexican tonight? He's like, yeah. 30 minutes later, you know what? How about that Italian place? And he's like, no, what do you mean? I thought we were having Mexican. Like, I had thoughts of fajitas. And then guess what? He's like, fine. You want to go to Italian? Fine, right? 10 minutes later, you know what? Chinese. Can we do Chinese tonight? Like, I'm kind of feeling like that Chinese thing. And then, right, and then I go back, you know what, Matthew, I know you really wanted Mexican, so we'll do Mexican. And we have this flexible changing pattern in our brain, and it comes to trading. Like, I'll be so bullish on something, gold or silver, but if I see a sell print, I'm like, wait, they might be selling. And if we go below this trade, you know what? I don't care if I was bullish and I went on social media and I told everybody to buy silver. We're below the prints. Let's sell. And I change my mind like that. Where guys are like, no. I didn't we like silver, right? What do you mean we're going short? And they're slower to change their minds, right? They're stuck in that, like,
you're not allowed to be wrong. I mean, it's cultural.
Right.
Not to be wrong.
Right. And it's not about being wrong. It's about changing our minds, right, ladies? We just changed our mind. Okay, I don't care what I said 5 minutes ago. This is how I'm feeling now.
That's funny.
Stephanie?
Yeah. Coming over. It's so amazing. Charles, I think you're onto something. Flexible in your mind.
Yeah, I see it all the time because people say, what do you mean you're going short? I'm like, we're below the prints. Let's do it. And they're so stuck up here. And that's why when we've had corrections, women outperformed because we were like, oh, we're not going up anymore. Okay, let's go. That's the secret right there. Men won't even stop and ask for directions.
And it's something about women that are really fast learners.
Uncle, feedback?
Women are really fast learners. I train and I trade with a lot of men and a lot of women, and women pick it up like this. And they're applying it. They're determined. They're getting out there and they're taking the trade, they're taking the risk, and they're on it. Men are a little bit more, like Stephanie said, they're not as flexible in a trade. And sometimes, because I know Stephanie's a day trader, I'm a day trader and a swing trader, and I run the trading room. And at the trading room, all of a sudden, depending on the market condition, I may be tempted to say, hey, let's raise the stop, or let's put the stop at break even. I don't like the way it's trading. So we're saving the trade versus, and we're very flexible. But didn't you say that, we have a target that is like 10 points higher, and I'm like, market conditions change. And so, we have to keep up with what the market is giving us. And I think that's very important. So I find that women traders are way more flexible than men in trading in general, and really fast learners.
And Anka, hi there. Would you say that they also trade less frequently too? Some of the research I've done.
I agree. I agree. And women are more, let's say, scan focused. They're, men, if we find a trade, we discuss about the trade, but women say, wait a minute. I know you said that, let's say we're focusing on NASDAQ, but hey, there's a setup that is happening in Russell. How about that? So they are always in a search for new opportunities and to jump on the next best trade.
I was going to say possibly we're more disciplined, just because I don't know about your households, but in my household, I am the nag to my 17-year-old son. I am the one constantly repeating my stuff. I'm the bad guy. And so just being the disciplinarian that way, you told yourself, if this trade's below this, I got to get out. You got to follow what you put your money where your mouth is and do what you're supposed to do, right? After you've been nagging your kid every day in and out. Maybe we're just more disciplined that way.
I just think that you can't underestimate how most men of a certain age grew up, and they were not allowed to be wrong.
That's exactly right.
Really, really affects in the traders we work how it goes. My kid is 12. His whole age group might be completely different. I mean, it is very fluid, and they are very there's less of that be a man than or wear a dress as a girl or set the table, whatever the heck that everyone else had to deal with. And it's hard to unlearn that if you're a man. Plus, you're supposed to win. So again, all these things. And I agree. The other thing as a woman, do you walk around your house and say, calm the hell down? I keep walking around going, everybody calm the hell down. It's COVID. Everyone has to just relax and give some grace in this whole situation. So I don't know.
Actually, I'm a loud one. Sorry.
The hell down.
How do we involve a younger generation of people into this space? I'm asked this constantly. How do, not just millennials, but I mean, just what we see, maybe 50 and up are doing what?
Yeah.
Are following. I mean, how do we get more people into this that are not retirement age?
Well, do you guys find, we have some younger traders, and what happens, I don't know if it's because they are more with technology and they've had a lot more gaming and a lot more stuff. I find my younger traders want more juice, right? And a lot of the trades, even if they are more exciting trades, need to be very disciplined. And that's the part I have with my younger traders is they want the excitement, but they are less disciplined. So
maybe why we had so many of the people that couldn't do the sports betting starting to follow us.
Yes.
Mm-hmm.
Wow. I was going to say, Pat, part of what's happened from this COVID is, of course, the phenomenon of the Robinhood traders, who are the younger generation, and they're all sitting home now day trading, and it's added so much liquidity to the market. It's actually been kind of awesome. I'm asked all the time when I go on the different media stations, is that going to be a bad thing ultimately? And is this going to all crash and burn because they don't really know what they're doing? And quite honestly, it's not so different than what it was when I was trading on the floor, in that as soon as a commodity got hot, nobody knew what the fundamentals of that particular commodity were, but everybody knew it was hot. So they ran in. And eventually you'd have the fallout of the people who were just gambling without a strategy. And then you had the people who did very, very well and would just take that money and disappear. But most people learned their lessons and had to come up with a strategy, do or die. So I think this younger generation coming in now is been fantastic. And the other thing I want to say about that is a lot of the millennial generation, especially the younger millennial generation, would say Wall Street, ooh, bad, evil, the bureaucracy, ugh, don't ever want to be a part of it. No, 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 I want to do something, good for the world. And what's happening, and that's, I'm not criticizing that, but they were certainly dismissing the opportunity in probably the only place, as everybody has said, where you have an equal opportunity. And now the younger generation is like, wow, you know what? You can make money this way. Let's join the bandwagon. So there's been a real cultural shift.
Interesting.
I was going to say, as somebody who did start learning to trade, learning about the markets when I was 16. So my dad was a trader, and I went to ask him for homework help in like science, and I saw this crazy thing on his computer, and it was candlesticks. I didn't know that till later. And I asked him about it, and I was like, what are you doing? Mom's yelling because you're not upstairs hanging out with her. And he explained to me, I'm using math and probability to trade the stock market directly. I didn't even know you could do that. And I said, does it work? Do you make money? He's like, yeah. And something just clicked. And I said, it was 16. I didn't even know what he was talking about. I said, I want to do that because I love math, and who doesn't love making money? And that's it. So I was fortunate to be brought into it by a parent who wanted all 4 of his kids to be able to understand their own finances and manage their own money. My other siblings did not take to charts. They think I'm crazy, but it's okay. They became other professionals, but at least they know how to read their financial statement from their advisor. They understand, hey, the market might be topping, or, the Fed's printing money. Like, they understand a lot more than I feel like the average adult older than them does. And so I think those of you who are parents out there, I'm not yet, but if you are and you have a kid that's even slightly interested in anything that looks fun on your screen, bring them in. And once they're there, just break it down into tiny pieces. So that's one avenue. And I think if we bring that into our education, like, one of my dreams for the future is to have a trading education for my traders' kids or nieces or grandkids. My marketing team, not Pat and Niki, but my other marketing team is like, yeah, you got to wait on that. That's not necessarily going to grow your business, right? But I think that would be really cool to make it in a way that they could learn piece by piece like I did. So that's my 2 cents, since I did start young, unlike most people who learn when they're full, adults and careers and everything.
I think it's interesting because Sarah was saying how her children don't even call Chipotle by its name.
Yeah.
That was
yes.
Yeah, my kids think that when we want to go to Chipotle to eat, they say, hey, Mom, can we go to CMG? Yeah, because we taught them the symbols. While I have the floor too, I think the other interesting thing is trading from your phone, right? Like the reality of if I wasn't able to trade from my phone when I had 2 kids while I was still, like, they were babies and I was still trading, I don't think I would have been able to trade. And as we have a younger generation coming in, I don't think they're looking to have multiple screens. And I think they're trying to figure out how can we put the most information on a handheld to be able to trade. I'm curious to ask as well. I mean, I have a different sense, I think, just, I find that the younger generation is looking for more like scanners and systems, things that they can just have on their phone and give you alerts. And I feel like an older generation, I find, is looking for more of the skills, like teach me and I want to do. What about you or anybody else?
Yeah, I have clients that actually print out the newsletter that I produce. Mm-hmm. And I mean, that's about as old school as it can get. But I do see more younger people coming in, and they pick it up quickly. They're more inclined to engage as far as ask questions. Why did you do that? What do you think of this stock? And there's more vibrancy there. So it's...
we've got, I think, 27 different companies right now with multiple educators that we market. And it's very interesting to note that there's still a huge demand for, can I just get a PDF of your presentation so I can be making notes?
And print it out. Like,
and I'm like,
Mariel
seriously?
Mm-hmm.
And that just doing that, they get so excited. It's like, oh, I'm prepared now.
Mhm.
Okay.
Well, it's like you pretty much right now have to hit it at both levels. You've got to, you know, make it so they can print that stuff out, but then you've also got to make it so that they can access it on their phone. So it's almost like we're kind of splitting off, and, you know, you got to accommodate both or all age groups. So
Absolutely do. So I'm going to go again to our questions because I really feel badly if we don't answer the.
So I think a question that was asked was, can I make money while I'm learning to trade?
And I think that one was one that was directed to you, Anka.
Yeah, well, learning takes a lot of time. The sooner you start your learning process in trading, trading is just like any other profession, whether you're a lawyer or a doctor, you have to go to school and then you have to practice before you actually go into surgery and do a little bit of brain surgery. You can't just skip stages. So you have to go through each and every single stage of the process. Obviously, you know, and this is the tendency that Sarah mentioned, you know, these traders that are very young, they really want to come into the in a trading room or join a service, and they think that that's enough. But there are so many things that come with taking a trade, like position sizing, you know, the risk and everything. So those are things that you have to learn before you engage into a trade. Is it possible to learn and earn at the same time? It is, if you have the right mentorship, if you have the right assistance, if you have a proper hand-holding system, it is totally doable. And in today's day and age, you have that. Look at this panel. They're all these women are professional traders. They devote their life to trading. I know Stephanie, I know Jody, Sarah, I met her, and I met so many of you. Julie, I met you too as well. And, you know, we put so much effort into trading, and it's great. Select a trader, a mentor that is in sync with what your trading goals are and what your strategy is. Everybody may have a different strategy, you know, or a different instrument, a different asset. So some people are, you know, more prone to stock trading. Some people want to trade options. Some people want to trade futures. Some people want to trade Forex or any other instrument. Select what is in sync with you. You have to resonate and you have to love what you're doing, because if you don't love what you're doing, it's not going to go anywhere. So if you're looking at coming into trading just to make money, it's not going to work for you. So trading is like Michelle has tapped onto the subject. It's a math game. So overall, and Anne-Marie, I guess you tapped onto this subject as well. So you have to have, you know, a certain number of trades, and you have to have your odds, you know, the odds in your favor, and make sure that you win more than you lose based on the analysis that we're doing. But yeah, it's doable. So if you have a mentor that is literally, you know, feeding you knowledge and is on your side all the time, yes, it's doable.
And Anka, I just want to jump there because it reminds me of the cliche about give a man a fish and he eats for a night, teach him to fish, he eats for life. And really, I think getting back to the woman conversation, I know a lot of you try to do both. And, you know, some people want to just be given stock picks and they don't care about the education and they'll follow who's ever hot at the moment and then move on. And other people want just the education and are terrified to actually make a trade. So it's really great when you can have the balance, when you can say, here's your fish, and then say, this is why I gave you this fish. Now you go ahead and fish. And it's a process and it takes time. But what makes trading so exciting right now is that we do have the ability, all of us, to do both as gurus and mentors, is to fish for them, but also say at some point you got to jump in there with your own rod.
Right. Stephanie, you were going to weigh in?
Yeah, one thing I wanted to just say is, so I've been educating and teaching people for a long time, and then I was asked to do, you know, spoon-fed trades. And I've always been against that, but okay, fine. The younger generation wants to be spoon-fed. I'll be honest with you, they're lazy. Not everybody, But I have 2 kids, and I will tell you, not like I was growing up.
Yeah.
And no, they're not. They want everything in 2 seconds. They have no patience. Everything is like this. And they want to be spoken. Just give me the trade. Just give me the trade. Okay, here's what happens when you give somebody the trade. And I do. I do this all day long. I type my trades in, boom, right in real time, put in the alert tab. It makes a cha-ching sound. So everybody follows me in. A lot of them are learning. Some of them have already learned, and they know what I'm doing. Those people are safe. The people that don't know yet, right, haven't mastered it, they get in with me. But when I go, oh, I'm getting out, they look and go, why is she getting out? I don't think why is she getting out? It's going to go up higher, right? And they don't get out when I get out. And then it goes down. And then I hear like an hour later, well, what about MO, right? What about Altria? Like, what do you mean? Didn't you get out with me? No, I thought it was going to go higher, right? This is what happens when people aren't educated and they're trying to be spoon-fed. They're never going to, or they get in late. I get in. So what happens is I get in. One trade doesn't work out, right? Trades don't work out all the time. The next trade I call out, they don't get in until it moves all the way up. Is it too late to get into this? Right? And so that's what happens. I see it all the time. But if you learn and you really know what to do, you're in before me, you're out before me, and you have financial independence. So spoon-fed is not the answer. But you can make money while you're learning, but follow your mentor, whoever it is. We have a lot of mentors here. If you're going to follow them in, follow them out. Don't think you know better than them, because
that's a good point. Are you all getting the typical, what do we do before the election? Do we go all cash?
Yeah,
That's been a big, Leisha, do you get that from all of the option pit members as well? Should we trade now? Should we just kind of stick it under the mattress and come back later?
Sorry, I'm trying to unmute myself. I think Andrew probably gets that because he does a lot of our one-on-one mentoring, and he helps people with their portfolios and all that. The clients that I deal with, they're basically just looking for trade ideas. But yes, I'm sure Andrew gets that a lot, just being one-on-one with people and helping them with their portfolios.
I know, Sarah, you have how many different coaches?
Yeah, you can trade. We have about 14 coaches that all trade differently. And one message is clear from all of them as we kind of move into the election is volatility can be your friend or volatility can be your worst enemy. And it's just about us being aware of what events are going on and then figuring out what strategies we could use to maximize what's happening in the market.
And it's time frame too, because people have a mindset, and most of the questions that I get about this is, in fact, I'm going to be on TD Ameritrade tomorrow talking about this. Should we switching our portfolios now into value stocks? That's the topic that I have to talk about. So that's, really looking at now the whole TD Ameritrade audience and giving them advice on that. And my advice would simply be, at this point, obviously, we've seen the rotation into areas that we have not seen of the like of for many years. And I think it's healthier in a sense. And a lot of it is speculation on who wins and what's going to happen, et cetera, et cetera. So my point is your portfolio in these days, with volatility being your friend or not your friend, is really basically think in terms of a shorter time frame. And if you're worrying about your portfolios, that means obviously that you have the ability to just do it in a shorter time frame, have the same trade management that we all do just so naturally. Just like Stephanie said, I've changed my mind. It's going down. I'm going to go short. I'm going to get out. Not that we want people out there with their TD Ameritrade's accounts to become active day traders necessarily. But really, to me, the election has now already presented so much opportunity in this value space. Will that last? What difference does it make? We don't have to worry about that. It might not. So you just adjust your time frame and your way of thinking about the trade.
I think it's also important to just be really attuned to the short-term news and the news cycle that will feed into volatility in certain areas, like, all these stimulus sensitive stocks, right? Hotels and airlines and cruise lines and all that. If you want to be there, fine, then you really need to be staying on top of what is Congress doing? Are they putting out a full plan? Are they just keeping it for the big businesses? I think, even though I'm a technician and I learned technical analysis first, I don't live in a bubble under a rock, under my mattress, right? I have to be aware of bigger things going. So I would just say that anybody who wants to still swing trade, you can't just, change your life and be a day trader. That's fine. But in the area you're in, like maybe in certain industries or sectors, just stay on top of what's going on there, especially if it is really sensitive to those things. Because like Sarah said, the volatility can really help you out, but if you're not ready for it, it can really be damaging.
Unless you go fully algo. I mean, we have some people who don't even want to trade discretionary at all and just want to be quantitative traders and find a good algorithm system in order to follow. And then you really don't have to worry about it. If you believe in the system, it basically should have a system of targets and stops and be completely neutral on whatever's going to happen with the election.
I know
even if you have, I was going to say, even if you have a system, this is something my dad told me, and again, long time ago, but I got a lot of nuggets from him. And I'm glad I did while I had the chance. But one thing he said was, even if you decide one day that you don't want to read charts, you're not into any of this, and you become a quant, right? Essentially, you're algorithmic, logarithm, whatever trader. You still have to make sure your system works. You still have to check that the system is functioning and the trades are going in when they're supposed to and the machine's not breaking. So I'm just saying that there's still some attentiveness that needs to go. I feel like a lot of people want trading to just be this background machine, and you still have to check that the machine is working, right?
So that's called tweaking, and obviously a good manager, even of an algorithm type model, will tweak according to market condition.
Oh, I'm not even saying tweak though. I'm just saying to go and make sure it's operating the way it's intended, because especially if it's black box, which again, a lot of people are excited about, oh, somebody else did the work and figured it out for me. Well, you have to make sure that whatever they gave you is working the way they said it would. So these are just my warnings to the crowd, not back to you, Michelle, not at all.
Okay.
Unless you also get a lot of followers with DTI. So are they asking this? How are they responding to should we, shouldn't we, what should we do?
Yeah, that's a lot about like what these other ladies have said, and really shortening your time frame with all the volatility. The trade setups are really more in the day trade, swing trades, and watching what we watch a lot are what sectors are moving, what's on a real down day, what's actually up, on a really up day, what's really up or what's really down, and kind of seeing those shifts, because a lot of what you see too historically is kind of who's going to win? Is it the Republican? Is it the Democrat? And of course, as we were mentioning, other ladies as well, that, different president will push different sectors. Just going to push what they believe in. And, whether you like that president or not, that's really where you want to put your money, because that's what's actually going to go up. And so keeping an eye on that. And, some of the things we're watching are like the small caps versus, the larger caps. And that can all change, just, 4 years ago, it was a surprise to a lot of people, that the Republican was elected, and, you see that shift. And I don't know if any of you were watching it that night, because I know a lot of you trade futures, but, it's like, we were trading it down, and then we caught the bid and we traded it up. And it was when you saw that shift. And, from that point, when you go back and you look historically, even that 4 years ago, I mean, that was a low in the market. And when did it happen? In the middle of the night. It didn't happen during the cash day. It happened there in the middle of the night. And you saw that, moving forward and so forth. So, and then also, keeping an eye on, the different cycles in the election years. We always we'll look at that as well. But a big thing that we talk about too is kind of thinking of October 1st being a new year. You got January 1, and then you kind of got October 1, because again, the government is shifting where they're spending their money. Even with the new president, some of that budget will stay the same. And those are the sectors, those are the stocks, those are the places where you're going to see the movement. And so it gets to be, it's really fun, and it is very volatile right now. But, whenever we find out who the president is, then we'll have a much better idea what to get behind, where to put our money. And until then, we're shortening our time frame, looking at different things, making money in the short time so that we can really leverage, once it's all settled down.
Well said.
So Niki, let's take a look at our questions. Be glad you're not on the group in November, because we have split them up between presidential profits, hedging the elections. So their chapters for the ebook or before the election and the
Webinars
events
after.
after the election. So it's like, hey, this is going to be fun.
Yeah. Yeah. Well, did anybody else want to comment on that before we move on to another topic? Because we've got about, I think, 10 minutes left, and I have gone through questions. I've seen some come through, but if we've answered them, I'm trying to shuffle through them pretty quickly. But did anybody else want to comment on that at all?
Yeah, I can recall 2016 like it was yesterday, and the election results and Trump with his tax cuts, and the impact was huge. It was one of the best trading opportunities. So if you just stay on top of it and keep your eye on that sector rotation, there was talk about small cap. If anyone here does seasonality, you'll know that November, seasonally over the last 5 years, 100% of the time, small caps have ended the month of November higher than they began, and that seasonality is longer. I work with a couple of small cap hedge funds, and we've been playing that November role for years now. So that's something else to keep your eye on.
I'm just kind of piggyback on that if I can, the seasonality and seeing those small caps and going back even to another question that we had earlier, and how do we get a younger generation, or how do we get people interested in this field? And one thing that I've experienced, because I've got all these boys that just got married last year. I'm so glad we had boys, not girls. Woo! But their friends and themselves, they feel, even though they might come across overconfident, they really feel ill-prepared and not confident when it comes to the market. And one of the things that I've done with our boys and with their friends is going back to that 401k. Because most people have a 401k, and how are those broken down? Well, most of them are broken down into the small caps, the large caps, sectors, medical, different things, and looking at that. But when you talk about the small caps, one thing that I noticed while looking at some of the 401k funds, which is a longer term investment, is all that money going into those 401k funds and those small caps. So that seasonality is a really important thing. Thanks for bringing that up.
Yeah, and speaking of my older son, he's grown. He has his own place in San Francisco, but he's been staying here. It's larger quarters and a little nicer, but he is in the alternative energy space. And so I looked at the Russell 2000 for the week, the top trades, the top Bloom Energy, Plug, and he is in all of those stocks, and he's always talking about it. And I give him ideas outside of that. And he said, I just want to stay in my wheelhouse. I know this industry and I'm going to stick with it. I'm like, well, yeah, but look at the software, the semiconductor stock. But that's another thing that can really be helpful, is to trade what I would say, for younger people. If it's in your wheelhouse and the industry, you're going to be better served.
Yes. One problem I see a lot of people have, no matter what their age, is they come in, they want to start learning, they want to start trading, but then all of a sudden they start chasing the next flashing light, Yeah. Oh, I can make more money over here. Oh, I can make more money over there. And their mind gets polluted very quickly. And then they really don't make any money because they're so spread out. Focus on what you like, because there's lots of money out there. The money is green. You take it to the bank every day, however you're going to make it. So.
Just on that too, you can even be in an industry and one stock price can be significantly different than another, like Amazon, Etsy. Those are still similar companies, very different prices. So it might be a very different trading opportunity for the person who chooses.
One of the questions was, how do we address the issue for younger people where they don't have the opportunity funds? They have smaller accounts. What is realistic? How do we help them differently?
I'd like to answer that a little bit, because there are a lot of places really out there that will fund traders. And so not a prop firm per se that says, hey, you come in with 25 grand or whatever it is, and that'll be your storehouse. I mean, literally companies like folks that I work with all the time, Top Step Trader, you pay a monthly fee and they send you through a couple of combines and then they fund you. And in my mind, if someone gives you money, their money to trade, then you should know how to manage it. And so it's okay for them to charge you a monthly fee because they are affording you an opportunity that would otherwise be not there for you at all. And there are quite a few of them. So what you have to figure out is, hey, who's there? Who's reputable? I've been working with Top Step for probably more than a decade. And so I know them. They've been around since the beginning of whenever. And there are quite a few out there. You just have to figure out, hey, who do I learn from? How do I learn to manage risk? And once you have that backdrop, then you can enter a combine and say, all right, here I'm going to pass it. And what they actually teach you to do, which many of us don't know how to do, is truly manage risk when you are engaging in the market over a repeated number of times. It's much more simple to manage risk if you say, hey, here's my allotment for my 401k or my Fidelity Go account or whatever it is, and I'm not going to look at it until next year, or I'm not going to look at it until, the end of the half year. That's easy. You sit in someplace good and it goes with the market or it doesn't. But when we engage over and over and over again, it amplifies the amount of risk exposure. And so if you want to work in that environment, then those sorts of people can help. And I think that a lot of people think, ooh, that's a scam, because why would they charge me? If I'm going to give you 50 or 150,000 of my money, you're going to better know how to work with that, or I'm going to take it all back. And so those are the sorts of things that I would say that really are out there for people that they don't know that it's out there for them.
Yeah.
Kids are also pulling their money together. So they're almost doing fractional trading. And I think that's kind of a whole new concept, right?
Yes. So there's no margins.
Right, exactly. And then also you have micro e-minis as well, so that you can basically get exposure with very little money.
Absolutely.
You can actually open an account with $500.
Yes.
So the market has opened up for people not to have a lot of money.
Yeah, I just want to, from You Can Trade owned by TradeStation, I do also want to mention that I think that the minimums of account openings have changed in a lot of different brokerages, allowing opportunities for people to be able to trade. And just as Michelle had mentioned too, I mean, there's micro minis, there's options on micro minis. You can trade the ES big contract, you can go to SPX, you can go to SPY, you can go to MES. Those are all basically the same thing. It's just a different risk profile. And as long as we as traders understand what each of those one contracts represent, actually, I do think it opens it up to pretty well anybody, as long as you can get that, you make that choice of where you want to put your money to trade with.
And just to jump on that, I mean, this is, again, it sounds so new, just like high frequency trading sounds so new, but it's not. Back on the floor, I had no money. I borrowed money to make my first trade. And so in essence, it was kind of the same thing. Jumped in and traded for a tick or 3 ticks or 5 ticks or 10 ticks, whatever I could get out. And then you started to build money. And I even pooled some money with some of the other people on the floor that were starting out like I was. And then we would divide it until we had enough money to go on our own. This is not new. It just got lost with a couple of generations and has come back.
That's the whole point of NADEX, right?
Exactly. Yeah.
And I saw a TV commercial lately where they're trying to explain to people how you can own all of these stocks. And it's so adorable how they dumb it down. And like, oh, this is painful, but maybe necessary, because we constantly, again, with all the different groups that we work with, that's a common question. What's the minimal amount I can trade with? They don't ask about risk. They don't ask about, how much should I split up between the different trades. It's just, well, can I trade with $2,000? Yeah, but it's the same sort of issue. And the attention span seems to be 3 months. I don't care who it is. It's like, I just promise you in about 3 months, they're going to start around. Yeah. And I don't know the answer to that, because it's really not a matter of learning a new trading style. It's a matter of committing to learning.
And it's interesting that you mentioned 3 months, because this summer, I finally made like a guide to all my foundational education. I call it like the trifecta: price, timing, momentum. And it's 13 weeks, but that's because I use a 13-week goal-setting journal for my personal and business things. And I was like, 3 months, 13 weeks is just enough to kind of know if you're going to kind of go the long haul or if this is not for you. And so it's just a free guide that comes with my courses. But it's been really interesting, the feedback I've gotten. The coaching students are all over it and they're doing like every page and whatever, and it's speeding up their learning. And then other people who are like, nah, this isn't for me. Then I'm like, okay, well, maybe I'm not a good mentor for you because you don't want to take the time to establish your trading business. You just, want the flashing alert, and that's fine. Head off to someone else. So I think the 3 months is interesting, that's like our time frame, ladies, to get them in the zone of, are you committed? Are you going to do this?
Mm-hmm.
Otherwise,
It is.
go do something else.
It's a year. So it's a year long for grown-ups to learn how to do something new and to take it seriously. And it's true. The people that take it most seriously are people who have some experience behind them and have some investing behind them or options behind them. And they've done something and they're like, oh, because as you're talking election cycle, I'm all cash all the time, right? I'm a day trader. That's what we do. That's it. So nothing wrong with what you guys do. I don't know how to do what you're doing, and it doesn't fit with my psychology. But to say, yeah, 3 months is great. And you're right, they don't even last that. So it's interesting because I think it takes longer than that even to get something under your belt and really understand.
Absolutely. Well, we're at the top of the hour.
Okay.
And does anybody have something burning that they just
Have to get out.
have to get out? Get off your chest. Now's your chance. If not, we're going to go ahead and call Raleigh in, who is, we always call him the Mighty Oz, the man behind the curtain that makes all of this stuff happen for us. He's
There he
amazing.
is. We missed you. The whole hour we didn't get to see
I
you.
know. And I keep,
I tell you, it was, what a great session. In particularly, when we were talking about the differences between men and women, it's all I could do, not to be defensive or combative, but to agree with what you all said. I mean, seriously, I early on in my career, after leaving the corporate world, I worked for a trading company and we provided mentoring services. And I can tell you that, and I worked with a lot of the students, just getting them spun up. I wasn't qualified to be a teacher, but I would look at these trading journals and things that would come in, and the stuff that came in from the guys, generally speaking, was just like all over the freaking place. I mean, their goal was to take 40 trades, paper trade them, log them, explain what you were doing, demonstrate that you were grasping the concepts. And I mean, it was like the Wild West, 1 lot, 3 lots, 10 lots. I did this, that, and the other thing. By and large, the women came in. They were following the plan on growth. I started with a single lot. Here's what I did. Here's my exit. Here's my entry. Detailed journals, observations of what was going on. I mean, that was from, I saw that enough to make that as a firm generalization. So to the point, many of you said you are rule followers. Now, some people will bristle at that and go like, oh, I've got to be a pioneer. I've got to be a cowboy. But it is about rule following. The second thing I want to mention to everybody here that I thought was great, several of you brought up in your presentations, let's make trading boring. Boring and consistency is how you win, in this opinion, but that does not going to appeal to the male psyche at all. And that's a little bit, I think, what Anne-Marie was talking about when you talk about hedge funds. You're going to see the guys are going to be taking those risks out on the fringes. We're going to go for it big or die trying, that type of thing. And that's just an impulse. But I don't want to say much more in this segment other than to say that I really thought that your points of view were fantastic. And I'm just delighted to have been a part of this program and to promote you all, and certainly look forward to working with all of you again in this format or other formats, because I think you have an awful lot to share, with trader and people out there. And I commend you all for your success.
Thank you. We've actually talked about making this a quarterly return, that we specialize on the women and wealth, that we do maybe every 6 weeks, a wine and women ask the experts type panel.
We're throwing around some ideas. So
Yeah.
you guys send us, let us know what you think.
It dawned
It's definitely
on me
fun.
during the presentation
Mm-hmm.
how neat it would have been. So we know that we had, I don't know, we had almost 5,000 people, I guess, register for
Yeah.
this event. But this should have been a tell your friend type of event. It's like, I've registered, here's the link, go get your friends, come on here and just make it that kind of a thing. Like a lot of parties are that way, because, you know, the opt-ins are interesting, but it would have been more interesting if I had opted in. I said, this looks great. And I said, here's the link to 3 of my friends. And then they send it to 3 of their friends and build it up like that. I think would be great.
We'll give it a try. And a final cheers to all of you ladies for coming
Thank
on.
you, ladies.
Sharing
One
your
sip left.
expertise. Thank you so much.
Absolutely.
Thank you very much.
Thanks for having us.
Thank you. It was very fun.
Thank
you all.
Thanks, everyone.
Good job. Give yourself a round of applause. Absolutely.
I am woman, hero.
Yes. I'm going to send you all the playlists. I put together 2 playlists for people that came in early, all featuring women artists, etc. I'll make sure I send those Spotify links to all of you because I think you will all enjoy it.
We were dancing. We're like, dance. Yeah.
Mm-hmm. Well, we owe our audience a quiz time and a prize. And ladies, we dropped 7 people, and that was it from when we started the Ask the Experts, which is really good for this time of day because it's a hellacious time to try to ask people to hang in there.
And after 2 full days of education. So that's
So
awesome.
We're going to do our quiz time. Thank you, ladies. Appreciate you all.
Thank you.
Thank you.
Bye, everybody.
ladies.
So this is the one that I get to do, and it's this quiz. We've been doing one at the top of every hour during the session because we like to combine fun with education. And here's the thing. The first person that comes up with the correct answer to this question and puts it in the chat panel is going to win a $100 Visa gift card. Now, I want everybody to make sure they're ready to Google because this is a very, very difficult and challenging question since it's the last one of the day. So if everybody's ready, here we go.
Our 2 fabulous
So
hosts. Sheet, it's on our names.
And if I had a heads up, I would have taken it off.
I know it.
I hope we have an answer.
We haven't lost our moderators for the... Too funny.
Let's see.
All right, we do. And it's
Quinn.
Quinn. If we mispronounce your name, I'm sorry, but yes.
Q-I-N-G.
Yeah.
All right, and drum roll, please. Obviously, Pat and Niki Johnson, Westmark Trading. Awesome job, ladies. Thank you so much for hosting this fantastic event.
Thank you. And thank you, everybody, for supporting us. Really means a lot.
It does.
Okay, you don't have to leave, but you have to go home.
We're going to still finish our wine, so.
Thank you.
Thank you, everybody.